All right, we want to turn now to an economist who wasn't as disappointed by this report. David Resler is a chief economist at Nomura Securities, and Bloomberg ranks him as the most accurate forecaster for payroll data. That was for 2010. We trust for 2011 he'll be just as spot on. He's also one of the few Wall Street economists who didn't raise his payroll forecast after ADP released its bullish jobs report on Wednesday. So welcome to the show. Thanks for joining us. David, let me ask you, first of all, what you expect going forward. I mean, Ben Bernanke saying 4 to 5 years. We just showed it would take about 6 years if we continue at this pace. Will we pick up and start adding jobs to match people graduating from college and immigration, or are we going to still look at these low levels for the foreseeable future?
Well, I think the levels will get progressively higher, but I agree with Mr. Bernanke that it's probably going to take us several years, 3, 4, 5 perhaps, to get back all the jobs that have been lost. Our own forecast foresees an unemployment rate still above 8% at the end of 2012, which is as far out as our forecast goes, and that's not a very pleasant reality to be looking into.
You said 8% end of 2012.
Right.
Okay, so that's
above 8%.
Yep, got it. Okay.
Which is, I mean, Jan Hatzius was saying 8.25.
Yeah,
so
we're very close to that number.
So fairly bullish, even though it's not a fantastic number. What do we need to do, David, to increase job creation? I mean, what does the president need to focus on here? And is he making the right moves in this new sort of change of tack that it looks like he's taken?
Well, I think we need to have another quarter of demand growth like we had in the fourth quarter. What we've seen is very robust demand emerge in the fourth quarter. We're going to get better than 4% growth in consumer spending for the first time in at least 5 years, and it could be the best in 10 years. If we had another quarter like that, that kind of performance is going to start convincing employers that the business environment is improved enough and they're going to start to hire more workers. We've pushed the productivity envelope about as far as it can be pushed. Hours worked are on the high end. Overtime is on the high end. And I think that means that the next step for satisfying the demand that's developing in the economy is to hire more workers. Now, does that mean 300,000 or 400,000 a month? I don't think so. But it probably means drifting higher from the low 100s to the high 100s.
You know, David, I hear you say, you know, if companies start to hire, we keep hearing, Matt and myself, about maybe the first half of next year, or first half of this year, forgive me, is strong, and then we start to kind of tail off the second half of next year. Do you agree? And then maybe we're not necessarily out of the woods yet when it comes to the economy.
Well, I think we won't know really. Let's say we're right. The first half of this year, we do get this acceleration in demand and acceleration in economic activity. Mm-hmm. What businesses are going to have to decide upon about the second half is going to be their crystal ball as it looks at the middle of this year. And if the nature of the improvement in the first half is of a fundamental character, they're going to be more optimistic, and we can perpetuate this expansion into the second half and beyond. Now, we do have to realize that we're facing another unpleasant reality at the end of 2011, and that is that we now have fiscal stimulus that's going to go away next January 1. The 2% payroll tax withholding cut that we're getting for this year goes away. The emergency unemployment insurance compensation program goes away on current law. So we'll be facing a similar set of challenges in December that we faced this past December.
Does what's going on in the economy currently, David, does support QE2 in your view?
I think the Fed made the right decision to engage in QE2. In the middle of the summer, it looked like that we were facing a very serious threat of a deflationary fear taking root. Well, I think the Fed's actions have pretty much arrested that fear, maybe even reversed it. We now have expectations of inflation moving back into the normal range. I think the Fed doesn't need to do a great deal more. They've provoked a rally in the stock market, instilled some confidence about the outlook, and if that confidence stays there, it's going to feed and build on itself and generate more jobs.
All right, hey, David, thanks very much. Really appreciate your time today. David Resler there from Nomura Securities, Bloomberg Best.